Hello everyone and welcome to another video here at globaltrader.club. If you don't know or if you're new to the channel, what we do is calculate the swing days ahead of time, swing hours within every day ahead of time, and as we get closer to the swing days and hours, we're obviously having pricing as well. And I know it sounds a little far-fetched, and in fact people say it's impossible, and I've been banned from advertising and promoting a lot of the videos that I would have loved to promote by social media channels, but never mind. This is the globaltrader.club. As you can see, that's the website, and here in the members area what we have are the swing days and the swing hours. As you can see, this is for this week, right? 17th to 21st of March. On the right hand side you can see 24th to the 28th of March, and in fact I posted all of this on the 21st of February. All right, so in case you can't see it, let's move this up. You can see that is 21st of February there, right? So, and because I've posted all of these beforehand, what you can see here, the whole of March, in fact I'm going to be posting the whole of April at the on the weekend, at the end of the week, and they'll be able to see, all the members will be able to see what the swing days are, and what everything, all the swing hours are and the swing days are for these assets: gold, euro, dollar, SP 500, Nasdaq, Dow Jones, and Bitcoin, and all the hours. Now, as you can see, there's a video at the underneath every swing hour information, and the swing hours are UTC +3 my time, so you just need to adjust it with a time calculator to match your location. Okay, so what are we doing here? Why am I doing this video? Well, this is a short video on how you can stop second guessing the market, because if you know the swing days, if you know the swing hours, plus you've got pricing, then you're pretty much set. If they come together, you trade. If they don't come together, you don't trade. Okay, also the reason now we're trying to do this on social media, before I never did these videos, if you've checked them out, most of my work was just basically not shared with the public, and this is why right now we're doing more videos, because we're going into the next phase of software development as a fintech company. That's why. All right, so before that it was all pretty much just private clients and consulting, and also trading, and we'll see how we can do it here as well. Now, for whatever you're trading, it doesn't matter. You can calculate the swing days, the swing hours, and the pricing for whatever. As you can see, there are three things here, components. The swing days is the daily chart. This is what, SP 500. As you can see, these are the swing days with the arrows here that I've calculated before. So on these days we should have a reversal or a breakout. Okay, and as you can see, they're not major swing days. They could be like swing days within the week, which is actually for short-term traders or day traders. That's what we're kind of like calculating. So for example, if I bring this back again, right, so you'll see, for example, if I get my big head out of the way, you can see I've got here, for example, gold Monday, Tuesday, Wednesday, right? So when we have something like this, it's probably going to be like a flow going up for a few days, or we're going to like find a top somewhere, but there should be a flow. Also last week we had a swing day. We'll take a look at that in a minute. Euro dollar Monday and Friday this week, so we'll see how that pans out. SP 500 Monday, Thursday, or Friday, so these 2 days are going to be important. Nasdaq Monday, Friday, Dow Jones Monday, Friday, Bitcoin Monday, Thursday, Sunday. All right, now the weekends, I don't do the swing hours for the weekends. I work actually Monday to Thursday. I don't work on Fridays either, but there's a swing hour for every day. All right, so all of the days except, like I said, Saturday and Sunday. And as you can see on the right hand side, I've got archives here for the previous swing days and hours, like going back quite a few years, as you can see. All right, so let's put that back and let's take a look. So if I know the swing day, what I have to do is obviously also figure out where I'm going to trade. So understanding technical analysis, understanding where the market may turn as per price is important. Then if I match to that level, the swing day and a swing hour, it's going to be a bingo trade. So there are several examples of these in videos, but let's take a look at this week as well. You can also watch last week's wrap-up video. That's quite useful as well if you're new to this kind of trading. You should be, because like I said, nobody in the world is giving a specific hour for you to trade. So let's take a look, for example, what we've got today, euro dollar. Now this is euro dollar. So last week we had swing day, Tuesday, and that's your Wednesday, Thursday market falling down. And then we had Friday swing day, and Monday was a swing day. You see Friday and Monday going back up. Now the next swing day for this, as you saw a minute ago, is Friday. So I've drawn a line here. Okay, so by Friday we should be down somewhere. And in fact, in today's video for the members, I did say, guys, we should probably push down into Friday, because that's Wednesday midweek kind of retracing, and our targeting should be these prices here, which are PST prices. You see, pricing is really important, and this is the daily chart. So for every day we'll have a precision pricing target. So as you can see, the market sold here at trading hours down into the targets, 1.0860, 1.0850. Those were the target zones there. In fact, it's broken it down a little bit, so we still may have a little bit more room to come down to 1.0815, which is also down here 59, 1.08148. You can see here, maybe, hopefully you can see these things, but everything here has a price value up here. So if I'm selling or buying, I'll be looking at the pricing here on the daily and on the weekly. Let's take a look at the weekly chart as well. Now this doesn't repaint, so once the week opens up, it means I've got pricing. Okay, and as you can see, the market has targets, the market has these lines. It looks like your regular price chart, but it isn't, because it works on time, space and motion. And if I have a sell zone, okay, sell zone, what we're looking to do is to sell the highs on a swing day, swing hour, and the right price. Okay, and that's basically it. Now with the euro dollar as well, if you watched today this week's videos as well, we had some levels up here. I think, yeah, 1.0957 was a level, and we had Monday for a swing day. But despite the fact that Monday was a swing day, I did say look out for this 1.0957 zone, because that's a target the market will like to make. So if I know a price, and then if I now want to sell around there, then I can wait for the market to come up. It hasn't hit 1.0957 exactly, but the highest it did was 1.09548, which is that bar there. But look here, this is more interesting. This is a trading hour. As you can see, the vertical lines are my trade hours. So if I want to sell at a certain price, I match it to a time. If the time and price match, that's your time to trade. And as you can see, that's where the market dashed down. Now you look at Tuesday again, you see there are trading hours here as well. So the market comes into this zone and picks up again. Okay, and then we have another trading hour here. As you can see, this is where they sold before. So they've come back up to a place where they sold before at a trading hour. So what do? You sell again. Okay, and that's how the market turned into Wednesday. This is your Wednesday, and as you can see on Wednesday as well, market just nicely selling at the trading hours, following through all the way into the target zone. Yesterday too, market sold down, bounces off the weekly. I don't have a trading time there, so there's nothing to do. Trading hours are here. Do I need to do anything here? If you know technical analysis, you wouldn't. But if you've learnt from us as well, you take the next one. Why? Because that's the impulse, and that's your 37.5 at the trading hour, going back down into your targeting. Okay, same thing today, Thursday. Market comes back to where they sold off at the trading hours. So you're selling off. Now, when you sell off at these levels, because you've got time and price, what you can always do is keep your stop losses tight. This is really important. Sometimes market goes back, makes a slightly higher high, takes out all the stops and goes in your direction. What's stopping you, what's going to stop you from guessing twice is the time and price ability. Okay, if you can match time and price, then you don't have to second guess. Then you can say, okay, you know what, this is the right price at the right time. And that's what we really want to get at. So if all three things, the swing day, the swing hour, and a price matches, that's already a bingo trade. And I've given a few examples on that on videos as well. So how to stop second guessing your trade is basically, whoops, not this one, let's get rid of that, is basically to understand you've got a price level and you've got a time that matches it. So if I know Friday is a swing day for the euro dollar and the market is selling from the highs, what I want to be doing is selling into Friday, because Friday is a swing day. Okay, and then I'm also measuring my targets down. Okay, so all of the targets I'm measuring. Also here you can see 1.0745, which is a reflection of the price target, which we've got room to come down to. In fact, we've got room to come down all the way back into here, or even down here. And if that matches a swing day, we're going to be going long, because we're expecting the market to come back. We don't want to buy the tops. When it comes back into our levels at a swing day, at a swing hour, it's going to match a price. I don't have to second guess anything, because that's the place I want to get in. And because we know the hours, the stop losses are very, very tight. It's unbelievably tight. Let me show you an example. Let's say I made a mistake. Let's say I counted on the direction wrong. And let's say I want to buy the euro dollar here because we've come to PST levels and it's a trade hour. So I think, you know what, I want to go long. If I wanted to go long in this zone here, let me outline that. Okay, so we're all honky-dory. These are the trading hours here in case you can't see them clearly. If I wanted to go long here, then if I did go long because they were trading hours, okay, and I made a mistake, it's not a problem. Why? Because first of all, the market went up just a little bit. It would have been enough to cover my stop, but let's say even if it didn't go and it just broke straight down, my stop loss, if I entered here, my stop loss would have been just there underneath that low. Okay, meaning that my entry being here and my exit being there, and that is pretty much 0844, 0832, so 12 pips, pretty much nothing. Okay, it's only 10 pips. Now, does that mean it's a tight stop loss? Yeah, because if you're trading at the right time, right place, this is going to take off. Pretty much like that gold example I did, the SP 500 example that I did as well. In fact, let's take a look at that SP 500 once again. Understanding the swing days and the swing hours, we don't have to second guess anything. This is the daily. As you know, last week we were coming down. So once the market did a low on Friday, as you can see, it was nice and easy, because on Friday, let's go to the 15-minute chart. Okay, this is Friday. And in fact, on Monday, I said you guys could go long with this as well. All right, so this is the Friday there. Right there. So Friday market started to push up. It was a swing day, nice and easy. Okay, and in fact, if I take a look at the swing hours for last Friday, which was the 15th, I'll share that with you as well. Let's take a look. Okay, so this is the 10 to the 15. The 15th was a Friday, so we had swing hours 10:05 to 11:30, and I didn't have anything until 8:50 to 10:30. So 10:05 to 11:30 on my platform. 10:05. Where is 10:05? It should be around here. 10:05, I guess. Okay, it's right there. 10:05 to 11:30 is actually around there. Okay, so this is the zone where we're expecting the market to turn around 11:30. Now this is London morning pre-trade session. Okay, so this zone, as you can see, nice and easy, just going all the way up into 8:50, 10:30, and in fact I had targets there as well. So Friday worked out nice. And then I said on Monday, what we need to do obviously is follow this through. So that was a good move. And then on Monday we followed it through because we had a nice little breakout on the PST indicator. That also went up nicely and took us into, on the daily chart, let's take a look, into our target zone here. If you take a look at the video from last week, you'll see I had the target zone here and it touched right there. Now because Monday was also a swing day, well, we can sell now the next day because the market is a swing day and it came to a target, so the next day was good for a sell day, and that's your Tuesday. All right, and that didn't continue to be down still, but at the end of the day, anybody who sold there, the market did push down. But remember, once the market starts breaking up, it's a different ball game, and this PST actually gives us a nice indication of where else we can go to. So today as well, we can still push the SP 500 up into its swing day, and the swing day for this week, we have Thursday and Friday. Okay, so if the market Thursday or Friday can still end up at a higher level. Okay, now how can I trade that? Because this could go down or up, right? Because the stock markets are going down, everybody's complaining, we're going down, are we starting a recession, blah blah blah. So Thursday and Friday being a swing day, we're going to look out for this Thursday. So I've got Thursday this day and the next day. Okay, so what can I do? How can I trade if I don't know if it's going to go up or down? Not a problem. What you have to do is measure the pricing. For example, I got 5,617 here, and in the morning I had 41, which is 5,664 here. So if I go to the 15-minute chart, and let's get to the end here, then we'll be able to figure out if I want to go long, at what time and price should I match. Okay, so all I have to do is match the price and time. And look, today I talked about this zone and the weekly, and also the previous day low where stop sweeps happen. This is from yesterday, so we can get rid of that. Okay, from Tuesday. Yeah, all right, so this is Thursday. As you can see, the market made a sharp fall down. And in fact, let's check out Thursday's swing hours as well while we're at it. Did it go down? This is Thursday. Hope you guys can see. Let's make this a little bigger. Okay, so Thursday swing hours. Let me get myself out of there. All right, so here we are. Let's put myself aside. That's Thursday swing hours there. So I had 10 past 8 in the morning, and now we're at this, getting close to this 4:25 time zone, and then we just had 2:20 and 2:55. So 10 past 8 in the morning is there. Okay, so this is where the market happened. 10 past 8, you can see the market didn't go any higher, and they just sold off right into the trading hours here. And this was a zone which we talked about this morning in the video for being like a nice spot for the market to target. So if I want to buy, what I should be looking at is at these hours, I should be looking at the weekly pivot, the low of yesterday with a stop sweep for a turnaround if I want to go long. Okay, and if I want to go long, then I should have some targeting. Now, if I'm day trading, intraday trading, any buying from the lows is gonna probably end up here on a daily or the opening, closing, or the high of the previous day. So if I match an hour with time and price together, that's when you trade. If you don't second guess. Okay, and that's the beauty about it. This could work with anything as well. If you take a look at Bitcoin, this is Bitcoin on a 15-minute chart. Okay, so let's take a look. We had what, 10 past 8. We also had an earlier hour, I think, 6 o'clock and 2:25. 2:25 is somewhere around there because I was checking it out. That's your 2:25. But let's work with that 8 o'clock. Where's the 8 o'clock? It's somewhere around here. That's your 8 o'clock there. All right. So the market at 10 past 8 is pretty much on there, going up. And then, I forgot the hours again. And then we've got, 220 to 255. So 220, 255, we're here. All right. So this is not the best of places to trade, obviously, because we're in the middle of the zone, 225 to 255 here. So what we'll have to do is wait for the next hours to come up. If you're not in a good spot, then you don't trade. Now, if you want to buy Bitcoin, you can. Then all you have to do is check the daily pricing and so on, which I did do in the video today. This is a 15-minute chart only on this page, but the same mentality works the same way with every asset. Okay, as you can see, the swing hours for the day are the same for all assets. So all you have to do is match your technical analysis pricing to the hours and the times with the price, and that's pretty much it, as you can see. And also here, this is gold, for example. You can see on gold how in the morning you see how the market went up, and then that's your trading hour there, market falling down all the way in here. This is a trading hour. As you can see, it's raised its head up a little bit, and now it's crashing down a little bit, and it's all fine because we're at tops, so we don't want to be buyers at the highs. But like I said, that 3067 is still a target for us on the weekly. So if anybody does want to buy gold, you see how the price is bouncing off from those levels, the lines. That level is 2,842. And if 2,842 had actually matched a time, then that would have been a great place to enter again, because let's put it on there, 2,842. This is 2,842. Was that on the weekly? Sorry, 3,028. Sorry, not 2,840. 2,842 is this one here, HCL1. That one is LCL1, so 3,028. Okay, so 3,028 is actually a level which we should have had this morning. And the PST pricing on its own is already very powerful. So 3,028 is right there. Right there, as you can see. Okay, so time and price. This would have been a place to get in, okay, with your stop loss just under there, and that's fine. Okay, why? Because we've got a price and the time is pretty close. Okay, so if New York buys now, that's fine. Okay, and if you want to buy the New York as well, great. Why? Because this, in 15 minutes, we're going to have a trade hour. So if the market dips down here around this price level, buying this zone is okay. Okay, and you can see how precise the pricing is on the PST. One little touch, that's your price, and the market is bouncing off. So if you're bullish, you already have price levels. If you're bearish, that's also fine, because if you're bearish, you know, we're going to sell you off on the weekly at that line 77, price of 3,067. So if anybody wants to follow it to 3,067, what they're going to do is just buy the lows of the day at the swing hours with the price. And that's basically it. So now we're in a New York session here. So this plus this time period is going to be important. In fact, I should have made a comment somewhere there for Thursday. What did I say? Look, hopefully you can read this. This is for 6 to 6:30. If market does not turn, it should continue to 8:40 to 9:15. If it does turn, it'll go to 8:40 to 9:15. So knowing this, the next hour to target is already gold, because you know exactly now, according to the time as well, when you got to next check your trade. So you're not sitting just looking at prices thinking, oh, what's going to happen, when is it going to happen, and blah blah blah. You're already having a time to look forward to. This is why you don't have to second guess anything. Okay, so I hope this is giving a bit of insight. And that 425, as you can see right now, is happening right now. So that 425 is right there. So buying here is good. If the market goes back up, is good. The reason I've made that comment, okay, because it can break out, because according to what I can see, a breakout possibility is there. So if that is the case, why get out of the trade early? What you'd rather do is actually manage your trade, and if it does go in your direction, push it and just let it go all the way into even Friday if you want, or follow it to the end of the day or to the next trading hours here at, like I said, at 9 o'clock, where you can again manage the trade or take profit. So once again, timing and pricing allows you to stop second guessing. Okay, if there are any questions or any videos you'd like me to do regarding time and price trading, because you got, if you have questions, please make a comment below. And obviously, if you've made a comment and if you want something, subscribe so you'll be up to date with it. Or if you want to reach out, you can always reach out from the contacts page on our website. Hopefully this brings a bit of insight. Once again, globaltrader.club is the only place on the planet that's giving you the swing days, the swing hours, and pricing in advance. So knowing what day the market will swing, knowing the hours that are highly likely the market will swing or break out is really important for minimizing risk and maximizing profit. Have a good one.